Welcome all to this IBS Intelligence ID Now webinar on eKYC. Our title, The Era of eKYC in the GCC. The pandemic, yes, we are still talking about the impact of the pandemic, opened the door for innovative thinking and the need for digital transformation in the KYC Know Your Customer market. Supported by evolving regulations, FinTechs and financial institutions can provide new clients with a seamless and quicker onboarding procedure without the need for a physical appointment, thanks to the replacement of physical documentation with digital IDs and automation technologies. eKYC allows financial institutions, it is claimed, to reduce operating costs with better assurance that they know their customers and remain compliant with AML requirements. In the end, we hope, greatly improving customer experiences. We will be getting under the bonnet of all this in a moment. I'm joined by Vanathi Mohanakrishnan, Business Head, MENA at M2P Solutions, Omkar Nayak, Head of Product Management, Digital Financial Solutions at Comviva, and Basil McCly, Head of Middle East Region at ID Now. I'm Robin Amlow, Managing Editor of IBS Intelligence. Good morning, good afternoon, good evening, wherever you are in the world. It is 10:30 here in the UK, 1:30 in Dubai, and 3 o'clock in Mumbai. And that, I think, pretty much covers where our speakers are from. I'm going to begin, if I may, by talking to you, Basil. KYC is an issue for all companies and all industries. What are the key issues that ID Now itself is addressing in banking and financial services?
Thanks, Robin. So before I address that, just if you allow me 30 seconds just to tell you a little bit about ID Now, so the attendees know who ID Now is as an organization. We are one of Europe's leading identity proofing platforms. We have over 1,000 employees. 600 of them sit in call centers, around 20 call centers across Europe. We cover over 195 countries in terms of documentation. So in terms of ID documents, we service about 7 billion people. We're a German company. We were founded in 2014. We've grown to about 900, over 1,000 customers with over 900, 1,000 employees with over 900 customers. Now, to answer your question, what is that we're solving is really two things. One is giving assurance to the service provider. So in this case, the bank, that they're dealing with a genuine person, right? This is not a fraudster. This is a real person. They're using their actual face and a genuine document. And how do we determine a genuine document? We have extensive document coverage, and we connect with government databases or databases with governments that allow us access. So we're able to determine whether that document is genuine using NFC technology. So we're able to read the chip, check the certificates, and tell you, yes, this is a British passport. It is a genuine passport. We're able to extract the information. We're able to, if the government allows us, we can ping using APIs, ask the government saying, is this information up to date? Is it valid? Get a response, package that, and then return that to the service provider and say, you know what, this is a genuine person. It's an original document. And the government, the issuing government has confirmed that the details are up to date and valid.
Okay, well, you say you're operating in all these different countries with all these different customers. Do you have to tailor your product solution to local regulation, or can you just offer the one solution across the world?
Yes and no. So the solution behaves in a similar manner, regardless of geography. It's the document that is a difference. So if we're operating in the GCC, most of our customers will require the identification be done using a local document, be it a local passport or a local government issued ID card. In addition to that, we have to adhere to local rules and regulations, especially when it comes to data processing, right? So data in a lot of countries in the Middle East and across the world, PII, so personally identifiable information, cannot leave the country. So take UAE, for example, we have set up an instance in a local data center. So any information, any personal or data is processed locally. So that's we adhere to the UAE central bank. So information does not leave the country; it's processed in the country, remains in the country. We, as an organization, do not even store the data to comply with GDPR. We package it. We notify the service provider that the identification has been completed. Please download the data before we can purge the information permanently. So we're not in the business of storage. We're in the business of processing data in compliance with local rules and regulations.
Well, tell us a little bit more about the product set that you actually offer to banks, fintechs, financial institutions.
So, like I said, we are a platform. So in Europe, we have numerous products. In addition to the core products that we sell in the Middle East, which is auto ident, which is your self-verification. There's video ident, which is agent-assisted verification. And then we have something called bank ident, which is coupled with auto ident. And usually it's connected to your local bank to do what they call a penny transfer. We also do an offline service. So if you don't want to do eKYC and you'd rather get in your car and drive down to the bank branch and physically present your ID documents, we provide technology to the bank, not to rely on bank agents to confirm the identity, but rather use technology to scan the document to ensure that it's genuine, to confirm the identity by allowing the technology to do the match of the person sitting in front of them with the image or the portrait, their portrait on their ID card. And most recently, we've come up with our smart ID or wallet or digital identity wallet.
Okay, you opened your office this year in the DIFC Innovation Hub, February, in fact.
2021. So it's been over a year now.
Over a year, sorry, I beg your pardon. That was actually the first office. You mentioned earlier that ID Now is a European company. Why the Middle East as the first location outside Europe? What was the specific reason for bringing ID Now to the Middle East?
Great question. It's a booming region. So as an organization, we have competitors. Everyone's expanding. Most of our competitors are looking westward. They're looking to enter the U.S. market, as are we. But we decided to look eastwards, look into the broader MENA region, which all the way from Morocco to, let's say, Pakistan and further beyond. It's just that there's a large population, internet penetration, mobile penetration, and there's a need for eKYC. So, and a lot of these local governments are they're rolling out their national ID program, which goes hand in hand with eKYC.
All right, let's move to a broader discussion, and I'll bring in Omkar and Vanathi as well. Omkar, to you, what would you say are the key factors in the modern era that make KYC an absolute necessity?
Thanks, Robin, for that question. So I think some of the obvious answers are financial access and allowing more poor people to kind of have access to opening a bank account, or maybe have access to insurance or some of these other government schemes, right? But to be honest, when you look around and see that the tragedies that we have gone through, right? One obviously is COVID, right, which impacted everyone. India especially saw a huge amount of migrant labor, which moved from big cities to native places, right? In fact, more closer, if you see Pakistan, there are like the huge flood inundation that has happened there. I think a huge number of people have been displaced, and they had to move out, and they don't have any piece of document with them, right? So in such a scenario, what happens is any identity which uses biometrics as a part of a verification process, right, is something that helps people, one, identify themselves in terms of who they are so that they can access their own financial accounts better. That's one. Two, it makes it much more easier for government aid funds and NGOs to kind of distribute financial aid or any other means of aid to such displaced people, right? So that they can kind of, wherever they are, if they have been displaced from one place to another, restart their own lives and feed their families as such, right? So I think this is something that that came to fore during the COVID pandemic also, because I think a huge while we hear about India's startup ecosystem, right? The startup ecosystem has been a huge success story. We have created many tens of hundreds of unicorns. But what they have also given rise to is a huge number of blue-collared workers, right? Your Amazon or Flipkart, your delivery guys, your people who work at these warehouses, your Swiggy, food delivery apps where people kind of transport food and get it to your doorstep in 10 minutes. And a 10-minute grocery is a new fad, but then millions of blue-collar workers ensure that these unicorns become successful. And I think what's happened is that with more people, cities going under lockdown, people actually coming, ordering everything at homes, I think the number of blue-collar jobs has just jumped exponentially. And hence, eKYC is that one piece which kind of helped in onboarding as many people as possible very quickly across cities, right? So hence, I think eKYC kind of helps in maybe allowing access to finance, aid distribution, onboarding better, and just helping people stand up on their feet in case of distress. I think those are some of the examples that come to mind, Robin.
If I could add to that, it also provides security, right? So knowing who you're dealing with. So from a bank's perspective, for that risk, their liability, they want to know who they're selling the financial products to. Omkar, you mentioned food delivery. I want to know that, I want that assurance that that person delivering food to my home or my office actually works for that company. Uber, for example, I want to make sure that that captain actually works for Uber, that car that I'm getting into. He's been KYC'd by Uber, so it's just not some random person's car that I'm jumping into. So KYC is important to provide that assurance that you know who you're interacting with.
And you're talking there, the examples you were giving weren't financial as such. They weren't in the financial services
arena. It's not always. KYC is predominant in the financial services industry, but can be used by any, I guess, B2C or any organization that wants to know who they're dealing with.
Vanathi, can I ask you to share your thoughts on this as well?
Absolutely. I think KYC is beyond sectors per se, and I think it's largely ID management. And I think a piece of that or a subset of that is financial inclusion or the ability to kind of avail financial products, right? That's one of, so you see them, a very interesting use case. Like while we're talking about the larger ones, I mean, I don't know if you walk into Dubai airport today, the way they manage identity for residents, because the Emirates ID is fantastic today, the way they've been able to integrate across databases. So you walk into in and out of the airport, you don't spend time actually identifying yourself through immigration. You actually spend time walking in the airport because the airport's huge. It's that simple. Right. So absolutely. I think it's beyond sectors. I think financial inclusion, of course, is a very important aspect. I think Omkar brought very important points. It's at times like these when people get displaced, if you're still able to maintain that digital identity and give that solution across, it becomes a very important solution across countries, across geographies, across boundaries. COVID, the floods, all of these natural disasters, I think, have also gone that extra mile in telling us how important digital identity is in today's world.
Okay, we're talking specifically about eKYC rather than just KYC. I want to start now with one of our polling questions. So we have question 1 here to the audience. In your opinion, what will be some of the key factors driving acceptance of eKYC in the GCC? Please vote now. Is it comprehensive government regulation, robust system design, security options, or ease of access and ease of use? And I'll give you all a few seconds to vote on that, and then we will discuss your responses. Just a little bit longer, and then I'm going to end the poll. All right, we'll end the poll there and see what people have been saying. So, interestingly enough, it's ease of access and ease of use. People want it simple. People want it easy to use. So, Basil, back to you on this. We did touch on this earlier on, but what is eKYC? How do we make it easy for people? How do we make it painless?
Absolutely. So just to address this, the response, I think ease of use or ease of access is important, but I think there needs to be a balance between security and ease of access. So I think security is quite paramount when it comes to eKYC. Now, what is eKYC? It's electronic know your customer or paperless know your customer. It's a process of verifying your customer's credentials online. So no physical human interaction. Now, there is a human element to it. So the services that or the products that we provide, video ident, auto ident. So if I talk about video ident, it's agent assisted. So there is a human involved. Technology is supporting that human to identify and verify your credentials. But it's, I guess that human, that agent is virtual. It's not physical. Unlike KYC, right? KYC is the physical interaction where, a couple of years ago, I opened a bank account. I had to get a letter from my employer saying that I worked there and this was my salary and this was my start date. And I had to take a photocopy of my passport and my residency permit and then my Emirates ID and then a utility bill to confirm my proof of address, etc. Print out all these documents, get in my car, drive down to the bank branch. Did this mistake of going down at the wrong hour, so got stuck in traffic. Try and find parking. Of course, Dubai summer, you want to try and park as close as possible to the entrance. So that took hours. And then you get to the branch, you get a ticket, you wait, then you interact with a human. Give them the documentation. That human goes through that documents and then kind of signs off on them saying, original scene. And then he does not open the bank account right away. He says, okay, thank you very much. I am now going to hand over these documents to the back office to process. We will be in touch with you in a few days, right? So that entire journey not only took hours, it almost takes days for you to actually confirm your identity and get a service. Now, where eKYC comes in is that you can do that instantly, right? You can do it from the comfort of your home or office. There is no need to print anything. There's no need to drive to a branch.
It sounds like you're still carrying scars from that experience.
I definitely have. So with eKYC, all you have to do is you need a device that's connected to the internet. Yeah, I need a government issued ID card or passport. I scan it. I take my biometric. In this case, it's my face. I do a selfie. We do a liveness detection. We make sure that I am who I say I am. I'm actually present. I do a one-to-one match. All this is done in less than 60 seconds. I upload a few documents that are saved on my mobile phone or my laptop. And today, I can do that in the UAE and get an account open instantly. Now, that account might not give me all the services, but will allow me to do a light account. Please will give me an account number whereby I can, receive money, right? So that happens instantly. That's in minutes and not days. And that's the benefit of eKYC.
Anybody else want to jump in on this as well? Omkar, Vanathi?
Sure. Great points, Basil. And I think what's the customer ease of use is one of the biggest advantages of eKYC. And absolutely, when we kind of speak to some of our clients, banks, etc., right, and actually they kind of hint at platforms which enable this, and and as you said, some of these KYC requirements are similar across banks, and in fact, we see similarities across countries, right? So let's say there's a social security document which may be required in GCC, maybe that can be replaced by, let's say, an Aadhaar document in India. And similarly, there's a passport, there's an address that needs to be verified, etc. Right? And to be honest, while still some of these documents need to go through an OCR, optical character recognition filter, right? There are some countries, right, and some government institutes who have been able to bring these data points out over an API. So any platform which does both, which is basically have an OCR module along with an integrable platform, which kind of has the capability to integrate into different types of APIs, right? And, consolidate all this data using some sort of an artificial intelligence module, so that Omkar's physical documents which are scanned, as well as documents or numbers or details which are available in a government repository or a central financial institute repository, are brought together and made available to the relationship manager of the bank, as Basil mentioned, right? That just gives extra information readily available to the relationship manager there. So from a process perspective, right, whatever Basil had to go through in the initial stages before even his account opening process could start at the bank, everything is done sitting right at his home, right, or in the comfort of his office. And that's the customer experience that the new age platforms are helping to deliver, in this eKYC world. So that's a big benefit. Yeah.
Well, from the customer perspective, indeed, whether you're an individual or a corporate, it sounds like we're removing a major pain point. Vanathi, your thoughts on this?
I think we've spoken about a lot of these things, but I think, to Basil's point, what he made, I think his wounds are still fresh. The most important thing is the power of now. Look at the fintechs that have scaled today. What have they solved for? It's about servicing your customer in the moment. Nobody goes to a bank because he has nothing to do. You go to a bank because you want a product, you want a service. And we'll have to remember that while KYC is extremely important, regulators focus on it, all of us talk about it. It's for fintechs, it's probably the most painful discussion to have. It's the single largest problem you'll have to kind of solve when you have a discussion with a license enabler. But experience, Robin, when you started off this discussion, you spoke about customer experience. Somehow today, the customer experience or the importance of being in that moment and solving for the customer at that moment has become extremely important. I think that's one piece that eKYC solves for.
Okay, let's move on. The second significant issue that was identified in our poll, regulation. What part do regulations play in driving eKYC, or is this something that's coming from the institutions and the customers? And specifically, within the GCC region, which countries are making the most progress with clear regulations for the adoption of eKYC? Basil, to you.
Thanks, Robin. So there's two parts to this question. So first is what role does the regulator play? And first and foremost, it's the regulator needs to approve the whole concept of eKYC. That's the starting point. And then adding to that, the regulator needs to implement or put forward some kind of eKYC policy framework. And the goal is to kind of address that overarching challenge of financial inclusion, right? So the regulator needs to provide the trust to the public that providing this information to a financial institution online is equivalent to doing it in person. Secondly, they need to instill some sort of customer protection measures, to ensure that the customer's information is securely stored, is securely processed, and to give the customer the comfort of knowing that that the bank is responsible to protect their data and not to share with any third parties without their consent. And lastly, where the regulator comes in is they need to have an active role in oversight of any new product innovation, especially in the financial service industry, to ensure that product is not misinterpreted by the end user, and that the products abide with the local AML rules and regulations. So that's where I see the role that the regulator needs to play. Now, the second part of that question is what's happening in the GCC. Now, you say running behind, and that sort of implies that they're lagging. And I don't think any of the GCC regulators are lagging. I think what they're doing is they're taking a wait and see approach. And I hear from time to time again, I speak to officials in government. They say we don't want to reinvent the wheel, so they're not going to build something from scratch or ground up. What they're trying to do is trying to figure out what is the best practice, what is internationally accepted, or that model that works that they can adapt and then adjust to fit their local needs. Because you have to remember, the regulator also has their own stakeholders, and they need to make sure that whatever regulation that they put in place satisfies the requirements of all stakeholders involved.
Sure. And I think the internet, the kind of financial crime has also increased, right? While one side of it is you definitely want to enable customers, you definitely want to bring in inclusion. We can't ignore the other side, that there are bad actors in the system, right? And the anonymity that the internet provides today, you have that at play that's anyway running in parallel. So I think regulators do have that huge responsibility of controlling that, to, I think, to Basil's point, to retain the trust that needs to be there in the financial ecosystem overall.
All right, let's move on to this then. There's obviously a cost involved to KYC. There's a cost involved to eKYC. So the big question is, can eKYC help to reduce customer acquisition costs for institutions in the GCC? And if it can, how does it do that, Vinati?
I think everything digital reduces cost, and that's something that all of us talk about, right? It helps you scale. It helps you scale faster. The cost is lesser. But when you think eKYC, when you think financial institutions, any fintech who's trying to getting regulated, and I'm happy to be challenged on this, is always thinking about carry cost of compliance. And when you say compliance, it's KYC, re-KYC. So I have a slightly different take on this, Robin. I think the usual stuff is, of course, you bring down the cost of having to have branches, to have warm bodies man them, those wads of paper that you collect and store them, and then somebody goes and verifies them. I think Basil's anyway taken us through that story. That is process. There's a lot of that gets cut out, and that's probably direct costs. There's another aspect to it. Now, think of banks who already have branches. Think of financial institutions who already have branches. They're not cutting branches. So then what? Are we saying that eKYC is not going to benefit them? I think I look at two more vectors here. One is the opportunity cost. Basil could have said that, I didn't find parking, so I'm just going to the next bank. So you end up losing the customer. And the other point of, you end up KYCing a customer because he wanted a loan. You couldn't fulfill the application when he needed it. And if he drops off in that journey, you didn't fulfill what you wanted. You couldn't extend the product. So you haven't really made any revenue off that customer. The customer is never coming back to you. My propensity to go back to a brand like that, right? He's never coming back to you. So CLTVs, those kind of metrics have gone out of the window. And finally, look at KYC or onboarding also as a gate. I'm actually entering that institution or the brand. It's actually the gate. If my experience is not great, I'm not coming back. I'm not going to advocate. And so all of these actually tie up, and it's not just the direct costs. I think direct costs are largely talked about, but what happens to our stories on cross-sell and deepening relationships, all of that just remains unserved. And I think those are metrics banks should look at. And I think this is not just for GCC. I think it's generally beyond also, because if we just look at digital acquisition costs, then yes, digital banks today are coming there and saying exactly that. But what about the legacy players? We want them also to embark on the eKYC journey. It's got more to do than just direct costs.
It's fascinating. What you're talking about is the difference between costs I can see, implementation costs, regulatory costs, whatever. I can put a dollars and cents or dirhams or dinars amount on that. and say, this is what it's going to cost me to implement. What I don't see is what doesn't happen because it doesn't happen. I don't see the failed cross-sell. I don't see the customer walking away. I can't put a dollar value on that, and that's a very significant point I think you've made. Anybody else want to comment on that?
See, what happens physically and virtually, right? So me going to the branch, but also if I'm using an online channel, if I don't like the app or the interface or the experience, or it just takes too long for that service provider to eKYC me, I might drop off and say, okay, I'm not using this bank because I really don't like their app. And then I switch to another bank. And it's much easier, right? Because if I'm going to drive down and not find parking, I might think twice about going to another branch. But if I'm already there, I might just wait it out. But online, it's much more easy for me to switch instantly. So download the app, don't like it, delete, uninstall, install a new app, and go through that process. So it actually, I think eKYC or digital banking, there's a higher probability of a customer drop off if you don't get it right.
Well, speaking of getting it right then, how does AI, artificial intelligence, play a role in building and improving eKYC systems, Onkar?
Yeah. So I think while there are huge cost advantages in eKYC, right? Because purely, you're not actually physically reviewing a document, etc. But I think both Vanati and Basil, what they were mentioning is to get the customer experience right is not very easy, right? And we I think a few years back when everyone was jumping on the eKYC bandwagon, everyone I think went into the process of just making the physical journey into a digital one, etc., and got it one size fits all kind of mode. Obviously that it did not work well with all consumers. Like for example, Basil may be a consumer who is more comfortable doing the process on his phone, right? Maybe someone else is more comfortable doing on a desktop. Maybe a third person, maybe and maybe that person would want to be assisted, even an eKYC module to be an assisted kind of module, right? So hence it cannot be straitjacketed, and hence more investment needs to be done, both in terms of getting the process right, doing more customer experimentation, more branding and marketing in terms of what messages do you give to the consumer even when you are putting out an online journey, etc., right? So hence that's while the cost of eKYC transaction may be lower, but the investment that you're making to have that mobile app and invest in branding, invest in getting the journey right, invest in doing A/B testing, etc., is quite high, right? And that's what differentiates the bank's journey from what another bank is providing, right? And even if maybe in a few years, maybe the eKYC itself becomes a very generic module. And I think I was reading about this case study where in some country in Europe, I think banks formulated a union where they said, okay, this registrar is the eKYC registrar, and you get the eKYC done through that, and we are good. It works with any bank across the country. So maybe that's where it's going to go. But till then, at least I think AI could be one good measure of not only getting the consumer demographic right, where it comes to offering which KYC method to which type of consumer, but in a very differentiated demographic like India, right? Because we have let's say the top 100 million consumers in India who act, behave like, let's say, Western counterparts, right? Because they are well educated, internet savvy, etc. And as you go, lower in terms of the affluence scale, right, and the geographic distribution, some of the demographics, if you go along and define them, are rural, right? And they don't have too much exposure to telephones. They may not be educated, right? So what works for them, right? So it's very difficult for maybe one person, or it's too time consuming rather for, a marketing team sitting out of one particular location to design, so many consumer journeys. So it's just better from an AI perspective to allow the AI to kind of look at, okay, how can we solve this problem where there are these journeys and these consumer demographics, and how can we build for reducing drop-offs and improving CLTVs and helping cross-sell better, and at what stage do we do eKYC, etc., etc. So maybe that's one of the applications of AI that we can look for. And more importantly, fraud is another big component, right, which comes along with KYC, eKYC. So fraud control mechanisms obviously need to use AI and ML, right? And there are products in India which kind of help track application fraud, where any individual who is giving maybe a fraud document at one particular bank, right? That is kind of detected as a fraud, and that goes into a central repository, etc., and picked up by some other bank also, and it could be flagged as frauds, right? So these are very important databases which come into play, within the KYC framework, right? And hence, without AI, without ML, the volumes of data that is generated, we'll not be able to sift through and get to the right consumer that we want to onboard on our systems.
Okay, I'm going to turn the spotlight onto the audience again now with our second polling question, which covers some of the areas that you covered. The question is, in which area of eKYC do you think that AI would be most used? Again, we have 4 options: customer onboarding, risk profiling, customer verification, and fraud detection. And viewers, if you would like to vote now, we will give you a few seconds in which to make your choice, and we'll see what you think about the most used area for artificial intelligence. Our results, perhaps no surprise, given what you were just saying, Omkar, fraud detection comes top with pretty much even split between customer onboarding, risk profiling, and customer verification. Anybody want to comment on this? Is this what you would expect? Anybody?
Yeah, definitely fraud detection. Absolutely. That's paramount. And then I would say, if I were to rank them, I would say fraud detection and then customer onboarding. Providing that ease of access or ease of onboarding, right?
Well, artificial intelligence itself, if it's done right, is going to make it easier to onboard people. It is going to make customer verification easier. It means you're going to get a better customer experience.
Absolutely. And then it depends on the demographics, right? So Umgar was talking about, people that are, and hate to use the word, financially illiterate, or
no, you also, can say that people are financially illiterate. People with degrees, people with higher degrees are financially illiterate. You don't have to be poor to be financially illiterate. Rich people are financially illiterate too.
Absolutely. And then you have your older age groups. Now they might not necessarily be financially literate, but using AI could provide them with an easier or more convenient onboarding experience or journey, right? So again, going back to ID Now, we have a service called Video Ident. Now, this is agent assisted. So we've seen that a lot of people that are in an older age bracket tend to prefer to go down the video ident route than doing it themselves using auto ident coupled with bank ident plus QES, right? The journey takes about the same amount of time. It's just that with video ident, it's just easier because you're being guided by an agent saying, please tell me, your name and how do I spell it? Please show me your ID card. Please look right. Please look left so I can confirm the liveness. Now they walk you through that journey and they find that much more convenient. So that's another channel or another way of eKYC that with the use of AI, you can provide your customers.
Vinathy, you want to, you see you nodding along. Do you want to add anything to that?
Completely agree. Not surprised that we saw fraud detection up there. And to Basil's point, I think even Kumar mentioned guided KYCs. So I think it's also to do with the fact that I think everybody's learning along the way, and trust is something that everybody's building along the way. It's not just regulators. We tend to single them out. We tend to single banks and FIs out too. But the fact that there's so much, there are bad actors in the system, a genuine customer also doesn't want to completely trust the process. And so some of these tools actually help in the overall process of adoption also. Adoption at the end of the day, any technology is only as good as its adoption, right? So I think that's very important.
Yes, it only works if you switch it on, I think, is the bottom line. So Vinathy, then, what are, apart from remembering to switch the system on, what are some of the key challenges that banks and fintechs can face when they're implementing eKYC systems in the GCC region?
So I think we've spoken largely about some of these, the implementation challenges through the conversation, Robin. But, I'd like to talk about the fact that when we speak KYC, all of us tend to focus on retail KYC or the individual customer KYC. Look at GCC as a region. I think traditionally by geographical location, you're able to give the world the connectivity between the Far East and the West. Trade is a big aspect here, and we seem to be lacking, or we seem to be way behind the journey on digitally onboarding a business, be them SMEs, SMBs. I think that's one area where we need a lot of focus. We need a lot of work to be done on the consumer front. A lot of every GCC country is at a different level of adoption. So if you look at, for adoption, basically you need that infrastructure. You need a database that you can connect to, a centrally government approved database. And I think in that journey, every country is at a different level of both adoption and implementation. I think Basil mentioned very nicely that, the governments are some of them are waiting for a let's wait and watch. Some of them are being cautious and opening it up to some of the larger players who have a holistic approach to risk and compliance, where they're comfortable kind of opening that so that they don't open the floodgates. It's a very controlled exercise. That's something that we're seeing across the region over here. But I think banks and FIs should generally, if you're able to establish by using better technology that's available today, you're able to actually establish that this is not a bad actor, then you don't want to be starting that journey with, you're guilty unless you prove your innocence. You want to do it the other way. I think that's one big mind shift change that has to come about. We are yet to see complete acceptance. While infrastructure is available, while there are brilliant success stories, there are great business metrics that have come out of some of these, I think enablement of fintechs in this journey is somehow a little slow because of KYC and this being a challenge because banks don't trust anybody else to do it. So I think that needs to really evolve, and I'm sure we will see that evolve. And I think one more important thing, and I think people like Basil are doing a great job there, which is when you as a technology provider come to the country and say, I have this product and I'm going to democratize it or I'm going to scale it because I've seen it in another market, we need to be very careful to be aware of the nuances of the region. GCC as a region sees a huge influx of expats. An expat is going to have a very different banking requirement than someone who's living in his or her own country. You're looking forward to different time horizons. You're looking forward to different kinds of products. There's partial enablement in some places. There's what we require along with technology is contextualization for the region. And that is something that, if you're able to actively engage with regulators and pick up and bring the local flavor to it, I think it's going to be easier to implement and scale. We need to see the scale. There are all kinds. Look at the GCC might look like one block, but it's not necessarily one, right? Every country has different flavors to it, and you need to understand those nuances in greater detail to be able to act.
And as part of understanding those nuances, Vinathy, I want to extend that question. You come to well, not you personally, perhaps, but somebody comes to the region, I have the solution, I have the eKYC solution. how do we make sure that we keep that solution relevant and up to date and compliant with current regulation? Because regulations are changing and evolving all the time. How do you keep up to date?
I think I think fintechs need to be a little more proactive. Banks could do a little more in terms of not just taking the bare minimum technology required to do a KYC. So you could do a little more, somebody who can actually experiment and do a little bit of test on, if I adopt a better technology, something a little more advanced, can it actually can AI help it in any other way? Can AI actually provide something more to this market that's required? Apart from this, I think another very important piece that could drive this engagement a lot better is how we can bring in slightly more collaboration. I find this funny sometimes, but then consultants find themselves both a seat and a voice at the table when it comes to regulators. I think regulators should actively involve a larger ecosystem, right? If someone's developing technology for KYC, then it will be great if we do see the regulators collaborating a great deal nowadays with large fintechs, with licensed entities. If technology finds a voice and a seat at that desk, I think it will be very useful, because if you're going to develop a technology that the regulator is trying to solve a particular problem, right? The regulator is definitely enabling. That there are no doubts as far as that is concerned. But if a regulator is enabling and he's looking to solve for a particular problem, it will be good if fintechs can actually have a voice at that table and collaborate deeper with them, run tests, and see how that then works out in the market. And I think the learning will be faster, the adoption will be higher, and the regulator will be able to trust the solutions that are getting rolled out in the market.
I want to jump in, but Binati put it beautifully. I think if I could just add one thing, or just to, it's the whole testing thing. So this is where regulatory sandboxes come in, right? So a regulatory sandbox is where you allow the participants, so fintechs or any financial service provider, to test this new product with live customers, subject to safeguards and oversight by the regulator. And these sandboxes they do exist. They do exist in the UAE, they do exist in Bahrain, in Kuwait, in Egypt, in Oman, and recently in Saudi Arabia. So sandboxes are coming. This is where you can come and test in a safe environment, a secure environment, and before it's rolled out to the public, right? And if I could add one more thing, what was interesting, I did some research and I found an article it was by the University of Cambridge, and they were saying that KYC, AML, it was one of the most common measures pursued by the regulators in the MENA region. So when you talk about regulatory sandboxes, they're always looking at RegTech or new technology that addresses KYC and AML technologies.
Okay, I'm going to turn now to our last polling question, question 3. And the question is, what do you think are the challenges of implementing eKYC systems in the GCC region? As before, we have 4 possible answers for you: user acceptance, technological barriers, ensuring compliance, which we've just been talking about, and the need to train employees to adapt to the new system. So if you'd like to give that some thought and let us know your thoughts in the next few seconds, we'll just let that run for a little while. And it would seem nobody really thinks that training the employees is going to be a problem. Ensuring compliance with regulations, perhaps not surprisingly, if it's not compliant, you're not going to be able to do it. So it's got to be compliant. Well, we pretty much covered that issue. User acceptance, just breaking into the second place. I would have thought that user acceptance, given what we've been saying earlier about how eKYC is going to reduce, if not in some cases is already reducing pain, users are going to clutch it to their bosoms. It's going to be something I want to do. I don't want to spend my time, as you did, Basil, sitting in a hot car trying to find a parking space in downtown Dubai when I can sit at home in the air conditioning and do it on my laptop, do it on my iPad, do it on my iPhone or Samsung, other mobile phones are available.
People still prefer the traditional way, right? There are digital channels, neobanks, and all these fintechs. But you'll be surprised to know that the majority of people, and I can only speak about my region, they still prefer to get in that hot car and drive down to the branch. They just feel it's more secure. They're more comfortable sharing personal information, interacting with a human, physical interaction.
Is there not a demographic issue here, though? You're talking about people, let's be honest, I'm the one with the grey hair here. You're talking about people who look like me, not people
not,
who are in
not
their
necessarily.
20s and 30s.
Not necessarily. It could be okay. Fine. So your millennials probably not, but everybody else that knew how to do it the old way still might prefer to do it that way. They haven't transitioned to do it any other way because they just don't know how to do eKYC. They don't trust eKYC because nobody has. They need to be educated. They need to be told what is eKYC, what are the benefits of eKYC, how is eKYC more secure, and why is it more convenient. But ultimately, it always goes back to security, right? I need to feel comfortable and secure knowing that transmitting personal information over the internet is reaching the right person, that nobody's in the middle stealing my information and some bad actor and using it to commit some kind of cyber crime. So I think it's that comfort and the requirement for security.
Well, in developing that comfort and requirement, you talked earlier when we were talking about ID Now's solution in particular about video verification.
Mm-hmm.
How's that going to pan out in the GCC region?
So it really depends. So I see it trending in markets where the regulator has specified that KYC has to be performed by a bank agent, right? So you need to have a bank agent, representative, or an employee specialized in confirming identity, right? So if I may take Egypt as an example, this is a country where the regulator will be more open to adopting video identification services because they want to have a bank agent involved in the KYC process. They don't want to allow the customer to KYC themselves, right? Or using a technology independently. Now, it all depends. There is other countries, but again, with video ident, it all depends on the country. Some countries, if I take Europe, for example, in Germany, the BaFin, the financial services regulator there prefers video ident, which is agent guided and the agents being supported by technology. Now, if you move to France, now we are in the process of getting our technology or our product certified by ANSSI, the French regulator, and they're more open to having auto-ident, which is your self-verification. So technology being assisted by human, meaning you do the verification process on your own. You download the app, you scan your ID card, selfie, liveness, etc. But that entire session is recorded and then is played by an agent to confirm or to double check that there was no funny business, that it was actually done correctly. I didn't try and put in a different ID or wear a mask to mask my identity, and then they approve that ident process. So it really depends on the country, but video ident can be used in two different ways. Or technology can be used to help the human, or human can be used to help technology. Now, in terms of what's happening in the GCC, I said in Egypt, I see it trending there. In the GCC, again, it all depends on the regulation. Video ident, for example, we've implemented it for a bank in Bahrain, right? The regulator in Bahrain understands, self-verification, agent-assisted verification, and has accepted both methods. In the UAE, we're speaking to the regulator. There has not been discussions around video ident. They are more keen on using the auto ident or the self-verification process. So it really depends. It's a case by case.
Well, actually, I'm going to go now to some of the questions that have been posed by the audience, because I'm conscious time is getting away from us. I want to get a few of these in. And to the points you've just been making, and I'd like to hear from all three of you what your thoughts are on this. It sounds like, this is the question, it sounds like eKYC in GCC is not yet digital, but rather virtual. Can we expect to see a fully digital automatic eKYC standard across the GCC? I think that's a very interesting point. This is something that, I mean, I know the idea of a GCC single currency ended up going nowhere, but surely this is something that maybe the regulators could get behind, to have a pan-GCC standard for eKYC. Is this something that's achievable? Is it something that's sensible? That's me asking those questions, those last 2 points. Would anybody like to comment on that?
I think given that different countries in GCC are at different levels of maturity in that journey itself, it's too hard to say where this is going. But then I tend to agree with what Omkar was saying early on. I'd like to allude, when he was alluding to the point that there is going to be some form of standardization that will eventually arise when it becomes largely adopted, and when everything happens at a digital platform. We are still looking phygital. In fact, we made references to the fact that customers prefer physical. They still prefer physical, right? Because there's no trust yet. So I think it's a little too early in the game. I wish I was a regulator here. I'd probably have an answer to, where we are directionally going, but it makes sense in terms of the question itself. Makes a lot of sense, because there has to be some sort of standardization that will come at some point of time. I think it's
100%. There has to be some sort of baseline, right? Where this is a framework. This is how you do eKYC. And this will also allow technology providers like ourselves, right, to offer our services to service providers like banks, like FinTechs. Because, again, going back to Europe, we are regulated. We have to get certified because the regulator has set best practice or set a standard saying your technology must be compliant, must do 1, 2, 3, 4. And they test it, they audit it, right? Unfortunately, that's not here yet. It will come. And once it comes, then you'll see, your true digital eKYC being rolled out and adopted across the region.
Omkar, do you have anything to add on this?
Yeah, I saw a question on the risk profiling, whether KYC helps in risk profiling. I think there are a few use cases of these, right? And especially when you're giving loans, let's say the type of documents that an individual gives, right? Let's say for an address, I could give X or Y or Z. So depending on the type of document I give, or the type of education certificates that I give, right, as part of my KYC, those are used to kind of, profile that particular individual in a particular risk bucket. Because, from past data analysis, I think there are credit models which help in identifying, basis just the KYC documents being submitted, what the sort of risk this individual is. So scoring can start right from there, right? Even before, all the other parameters are being checked. And that kind of has typically helped in giving the or choosing the right consumer to give a loan, right, to prevent default, etc., etc. So some of the FinTechs in the analytics space are actually working on this in India, and I'm sure when this is a transition to GCC countries, right, in some form, because some of the a huge expat population who is working in GCC is from India and Pakistan and Bangladesh and Sri Lanka, right? And maybe some of these analytics technologies or the credit models can be reused in some form in GCC, right? So that could be one export which which the Indian FinTechs can help in GCC, or maybe even ID now can help pick up there, right? So that's one aspect of KYC that can be explored further.
Okay, I want to stick with you, Omkar, if I may, because I think this next question I want to pick up on. has you all over it. Can AI be used in detecting social engineering frauds? If yes, how? Well, I think even I would say the answer is yes, it can help in detecting social engineering frauds, but how does that actually work?
Well, we would need to kind of define social engineering fraud better. But yeah, but I think if I were to kind of give a fraudulently made ID, or maybe give an educational certificate of an institution which is not available, right? And maybe that there could be some college in some part of the world, right, which is only on paper. It doesn't have a building or a degree, and it's giving degrees year in, year out, right? So I guess, social engineering frauds, where many people are, giving these sort of degrees, which are fraudulent, or maybe giving a particular address from an agreement, which again could be fraudulent, right? Maybe a single data repository where KYC individuals or loan applications are consolidated, right? And that data bureau kind of is kind of used then to check for the next application, is something that comes to mind, right? Which can help to identify social engineering frauds. But I guess then today the regulations would need to support something like this, because bureaus are holders of data which are limited in only ensuring data stays in the country. They can't share data across countries. So in that case, if GCC, the first step should be, what's the data sharing mechanism, and how does it be in the right when it comes to the privacy concerns of citizens of each of these countries, right? If these two are taken into account and are formulated well, I think then GCC could become, another very important economic bloc, because then it becomes a financial and economic powerhouse.
To add to what Omkar is saying about the mechanism, so this is something where like a digital identity wallet would come in, right? Where social engineering, you're trying to extract key information through fraudulent means to then commit fraud, right? So having a wallet, right, it would give the power is with the ownership of the identity is with the user themselves, not with a central repository. They can then share relevant information. So I wouldn't have to share my entire ID with you. You don't need to know my nationality and my date of birth, right? For example, the usage of digital IDs, like if I go to a supermarket and it's age-restricted purchases, you're buying, let's say, tobacco, you have to be 18 and above. That person does not need to know my name and my date of birth, my name and my nationality. All they need to know is my date of birth. You having a digital wallet where you control your identity, you're then able to share key pieces of information and not your entire identity. And this is one way to kind of AI can come in and stop these social engineering frauds, where they take all your information and are able to commit frauds. So yeah.
Okay, let's move on to another couple of questions. We're now in overtime, people, but we still have the audience with us, so we'll keep going with another couple of the audience's questions. This is one I think I am going to answer very simply myself. Somebody says, I think Monzo is a great example of eKYC gone right in banking. Are the regulators in the UK more open than in the GCC? I don't think it's a case of the regulators in the UK being more open. I think they're probably just a little bit further down the track. Basil, what would you say to that?
Sorry, could you repeat that question?
Are the regulators in the UK, well, the question is, are the regulators in the UK more open than in the GCC? I don't think it's open is the word. I think they're just further down the track of adoption.
I agree. They are further down the track in terms of adoption. Like I said, in terms of regulatory sandboxes, they've tested new technologies and seen what works and doesn't work. They have a different risk appetite and therefore have allowed different solutions to be available in the market. In the GCC, the concept of a regulatory sandbox is fairly new. They're not able to, they haven't tested everything. They're trying to test. It takes time. Once they test, once they confirm, once they kind of look at that source code and make sure that it's legit, do their audit, do their due diligence, and then they'll be able to provide similar services, digital services, financial services as they are currently in the West or in the UK.
Right. Next one then. Presently, the online digital lending platform in India is able to do a face verification by facial movements with the digital photo card. Is this adaptable to the GCC with verification with a national ID card?
Yeah, so you take the national ID card, and so when they say that the facial movement, so you talk about the liveness, so there's active and passive liveness, right? To confirm that I'm actually physically present, and then you take a still and then you compare it to the portrait on that document. Now, say that portrait is outdated, right? My document, say, is valid for 10 years, and I took a picture 10 years ago. I was clean shaven, today I have a beard. The AI can't do that comparison. This is why I think it's a must-have where governments give you this API, this access, where you can call this service and say, okay, I've extracted the image. I've asked the customer to provide me with a selfie. I've looked at the image on this document. There's no match. Can you tell me if you have a newer picture on your database, or can you confirm using your technology to triangulate and then get a response? And then you can then make an informed decision whether that person is who he or she say they are.
Okay, we're now running up against other people's time pressures. Vanathi, I know you've got to leave us shortly, but I just want to ask you one last question very quickly, if I may. This again from an audience member. Would we be willing to allow a digital customer to open an account with due diligence, but limitations to be updated to full KYC at a later stage? Does it make sense to have a two-tier system like that, or is it a pointless exercise?
No, we have seen instances in India where we've spoken about light KYC, and then you then upgrade that. So you allow a customer with light KYC to do a certain amount of activities. It's limited in terms of velocity and limits. And then you go, and if you want to further transact and you want to further use that instrument, you kind of go and upgrade your KYC. We've seen instances like that. And I think it just circles back to the value of this is still solving for the issue of now. So when it comes to customer user experience, if I'm going to be able to solve for that customer by doing a light KYC and attending to that need and offering a solution right away, straight off the bat, I think that can be very powerful. So I think there's value in it, but then there's a lot of work that subsequently needs to be done in terms of ensuring that the customer upgrades KYC, make sure he's fully KYC'd. And I think there are both sides to it, and I think it's largely to do with the comfort of both the institution who is doing it and the regulator who would want to, whether you, in a large market where there's need for that kind of inclusion, I think it's very important to have the light KYC and the full KYC option. Maybe not so much in markets where we have access to digital KYC and it can be done instantly on the go.
All right, ladies and gentlemen, I'm going to call it there. If you have been watching, thank you very much for doing so. And to our panelists, I extend my thanks also for your time, your patience, and your insights. They were Vanathi Mohanakrishnan, Business Head, MENA at M2P Solutions, Omkar Nayak, Head of Product Management, Digital Financial Solutions at Conviva, and Basil McCly, Head of Middle East Region at ID Now. I have been, and indeed still am, Robin Amlo, Managing Editor of IBS Intelligence. Thank you for your attention.